For those of you who don't know, I'm Rhonda Reed-Curiel. I'm the Broker Engagement Council representative for Louisiana. And welcome to our fall broker series. Eloise Goche is our state president. She's on the meeting with us. Eloise, do you want to say anything to everybody who's here?
Of course, you know I have something to say, Rhonda. I just want to thank everyone for taking the time to be with us today. And Rhonda and Kim has had great information for you. They've put in a lot of hard work along with the staff. So I want to tell Rhonda and Kim and staff, thank you so much for putting this on board. And I'm gonna turn it over to you, Rhonda, and because I don't want to take up any more of their time. Thank you all again for being here.
All right. Well, we got some people in the waiting room. They're going to be jumping in. But we are so fortunate today to have Lawrence Ewan with us. He is the chief economist for NAR. I bet most of y'all didn't even know we had one, but he produces all kinds of great information. He and his research team do a ton of research, dig into statistics, look at the national economy, the local economies, and they're able to give us some great advice, both looking from the past and predicting, which is kind of like weather forecasting in Louisiana, what's going to go on with the housing market. So I want to turn it over to him and let him get started. So Lawrence, whenever you're ready.
Hello, everyone. Thank you, Rhonda, for the introduction. President Ilwa, I hope I am pronouncing it correctly, for inviting me to participate. Great to join you all. As you know, the market has certainly changed, and we are trying to see whether or not when it will stabilize, because 2020, 2021, exceptional years, but beginning of this year, essentially due to much higher mortgage rate, in such a short span of time, has reduced home buying activity, but the home prices are still up. So we are in a housing recession, if you want to call it that, in terms of business activity. Home builders, fewer business activity, realtors, fewer business activity, mortgage lender actually shaving jobs because refinance business has completely dried up. So housing recession for people in the industry, but not for consumers. Consumers who think that it is a easy picking out there, meaning that people can buy property at deep discount, they will be disappointed. Home prices are higher now compared to 1 year ago. The inventory situation still not really rising, even as the buyers have retreated. So what does this all mean? I'm going to spend next 20-25 minutes to give you my best assessment of how the market will develop, and just looking into the state of Louisiana also a little more carefully. With that, I'm going to put PowerPoint slide onto the screen. So let me do that right now. Okay, there we are. So let's first start with the broader economy, because economic conditions often drives the housing market, commercial real estate, many things follows the broader economy. And what we have seen is that 2 straight quarters of negative. 2022, first quarter, second quarter, you see it on the chart, negative. But it is a very minor negative. Let's go back to the beginning of the chart. What the beginning of the chart shows is that first quarter of last year, we got hit with 2020, we got hit with COVID, and then we had a lockdown. So the impact of the lockdown completely collapsed the economy. But the reopening brought the normal business activity to trying to resume. Restaurants, travel industry, Certainly, New Orleans is a major convention center. Many conventions or even sports events occur in the city of New Orleans. But once it was shut down, nothing could happen. But once it reopened, slowly trying to come out. Some positive since then until this year when it turned negative. Are we in a recession? Just on politics, I guess some people do not want to call it a recession. Other people are trying to force it as if we are in a recession because there is a midterm elections in just a few months and maybe some psychology of people's mindset, voters' mindset as to whether we are in a recession. But when I study Econ 101, the first time I studied, they said essentially 2 straight quarters of a decline is a negative. So in that sense, one may say it's a recession, but to be official, we have to wait another 1 year probably, because there is a group of people sit around the table, they discuss to vote whether we were in a recession. By the time it is declared, it's meaningless because we would have been well past this point. But economy, slight negative at the moment. Housing market is certainly contributing to the lower economic activity because fewer home sales means less moving trucks, less purchase of furniture and appliances, home builders not purchasing those lumbers, and the mortgage lender, title insurance, business activity, all coming down. So housing is contributing, and this is the pending contracts on a nationwide basis. The red line indicates pre-pandemic activity. So the early months of the pandemic, large decline, then bounce back, and then some, going above pre-pandemic activity in terms of pending contracts. But beginning of this year, essentially turning negative, negative, negative. It's been down 8 of the past 9 months. So housing market definitely in recession for people in the industry, not for consumers, not for homeowners, but people who are involved in business activity. It is a housing recession. If we look at the Louisiana, and I'm just taking the data off the Louisiana Realtors website, one sees some variations. So first, regarding the new listings, even as the buyers have retreated, the number of new listings is still not coming around. We are short on inventory. On the luxury side, we are getting more inventory sitting on the market, but on the affordable side, not enough homes available, and the new listings are still not coming around, which means we are still in a housing shortage. Pending contracts in the month of July, down 30% in Louisiana. A little more severely compared to nationwide, but year to date is something similar, down 16% on a year to date basis. And I guess more importantly, closed transaction. This is when economic activity occurs. This is when the commission checks get cut. So closing activity is down 10% overall year to date. And the days on the market is actually faster this year compared to last year, meaning you list a home, you can find a buyer more quickly, which is an interesting number given that home sales are slowing, yet the days on the market being very swift, which may be just a residual consequence of multiple offers of last 2 years. Multiple offers, by definition, means multiple losers. And this time around, people do not want to lose. So when they submit a bid, they want to sign a contract quickly. I think that's what may be happening. And the price is still rising, still comfortably above 1 year ago. And you can look at those data and even more data in the Louisiana Realtors website. Now, going back to the broader economy, one of the sort of knee-jerk reaction related to the GDP is the inventory. This is related to, that you see on Costco, Walmart, Target, all the inventory that we need to put it on the shelf. In a rising population, We generally need to have additional Walmart, so there's more inventory in this new Walmart and so forth. So it should be steadily rising in a rising population. But we had a supply chain disruption, as you can see on the graph. The container ships simply could not arrive on time, or say some of the factories shut down and they wanted to restart, and that took a little time. So there was an inventory disruption. But now, as you can see, inventories are much higher. Long-term trend line is we are getting back to normal regarding inventory. You don't have to do any panic purchases because there's plenty of inventory out there regarding normal things. We don't have housing inventory, but the inventory of clothes, detergents, toilet papers, food items, we are getting plenty of those inventory. Baby formula, I am not sure about the baby formula situation, but overall inventory situation or supply chain disruption is ending. Now, one very bizarre, strange aspect of the current recession is we have more job openings compared to people who are searching for a job. I have never seen this in any economic recession where we have more job openings. So the blue line shows how many job openings, help wanted sign, while the orange line shows how many people don't have job and searching for job. Now, it will never be a perfect match. Hypothetically, you are an architect, you lose a job, you don't want to work at 7-Eleven. So it doesn't mean that job opening is something that you want to fill in right immediately. But nonetheless, the fact that we have more job openings by almost a 2-to-1 ratio is quite remarkable. So very bizarre recession in terms of where we have more jobs available than people searching for job. Here is a state-by-state comparison. In Louisiana, you hone in and it is showing minus 2.4%. What does that mean? It means there is 2.4% fewer number of people working in Louisiana today versus pre-pandemic. So Louisiana is down 2.4% in terms of job compared to pre-pandemic. And in fact, you may say Louisiana is the only state within the southeastern states, or you can say the SEC conference, if you want to look at college football or college conference, is the only state that is essentially negative. Florida is positive, Georgia positive, Texas positive, but Louisiana is negative. So the orange color or the reddish color is all negative. So you look at, for example, Michigan, New York, but oil producing states. North Dakota is negative. Wyoming is negative. New Mexico is negative. Oklahoma is slightly negative. Alaska is negative. And of course, Louisiana. So industry that is related to energy production, gas, oil production, they're all negative. And it could simply be the case that oil companies are saying, look, we don't want to keep investing. We don't want to keep hiring oil drillers, knowing that Washington is trying to bankrupt us. If Washington is trying to bankrupt us, why should we invest in it? And hence, all these oil-related states are negative. Only exception is Texas, because Texas is so well diversified, they are no longer dependent on oil. So if somehow we can drill more, or oil companies feel more confident about drilling, then more job hiring can be done, and all this oil producing state could turn positive. But right now, oil producing state all negative because possibly they are fearful of what Washington wants to do to oil companies, and hence they are being very cautious about producing more. Now, if we look at specifically on few major markets in the state of Louisiana, New Orleans, this is total number of payroll jobs. Payrolls are people receiving W-2 statements. Many realtors are independent contractors. You don't receive W-2, but people who are receiving steady income W-2 statements. So back in January of year 2000, at the turn of the century, that's the first data point. And there was some movement until Hurricane Katrina hit. So when Katrina hit, look at the massive job losses and so many people going out of New Orleans. And then New Orleans never recovered from Katrina, as this data clearly show, at least in jobs. So it was that. And then COVID hit. So COVID knocked it out, reduced the job number. And you can see that it is still below pre-COVID in terms of job situation. Fewer jobs now in New Orleans metro market compared to year 2000. Baton Rouge, a little different, because from Katrina, many people went to Baton Rouge or Houston and other places. So Baton Rouge did not have job creation in the first 5 years of this century. And then from Katrina, there was some job creation as people were migrating out of New Orleans. But overall, even after Katrina, steady job creation. Right in the middle of the graph, that little decline that you see, that's just the foreclosure crisis. But once the foreclosure crisis were over, steady job creation in Baton Rouge, and then COVID hit, job loss, and trying to recover, but not fully back up in returns in the city of Baton Rouge. So among the two major markets, that is the condition. Overall state, again, starts slightly down. Home price appreciation in the meantime, it is a very solid price appreciation currently, about 10, 12% currently compared to 1 year before. If you look at the beginning of the chart, normally prices would rise 5% a year. Then there was a subprime lending boom, risky mortgages brought the prices much higher to 12%. Then we had a foreclosure crisis, prices collapsing to negative. So some people say, well, are we in a repeat situation? High, strong price increase, so should we anticipate some price decline? And I would say, well, let's look at the fundamentals. Fundamentals is that we don't have subprime lending that will blow up. So goodness, we don't have those risky mortgages. People who bought a home, they have to meet the street underwriting standards of ability to repay the loan. They met those standards, and hence one should not anticipate foreclosures unless there is a massive job cuts, which is not really happening. I mean, Louisiana, jobs are being created, but slowly, so you are not back up to pre-COVID, but at least jobs are being added slowly in Louisiana. The second difference is that there is no overbuilding. Builders overproduce back during the foreclosure crisis, but this time around, there is no overbuilding condition. Now, let me turn now to mortgage rates, what your consumers are caring about, what you are monitoring very carefully. The blue line is the 30-year fixed rate mortgage, 30-year fixed rate mortgage. The red line is not for you and me. It's for the banking system. It's what the Federal Reserve directly controls. So during an evening news, when you see that Federal Reserve has raised interest rate, they're not talking about mortgage rates. They are referring to this red line. So the red line can go up, go down, as you see on the middle of the chart, or around on the middle of the chart. The blue line may not respond. So it is possible that when Federal Reserve changes interest rates, the mortgage rate may not change all that much. However, let's look at the most recent period, 2022. Even before the first move by the Fed, mortgage rates start climbing. And when the Fed decided to raise interest rate, mortgage rates reacted violently, meaning that it increased significantly from 3% to 6%. And the reasoning for that is inflation is out of control. I mean, you see it at the gas station, you see it at the grocery store, inflation is out of control. And the market, mortgage market is saying Federal Reserve has to be very aggressive to contain this inflation. And way to contain inflation is the Federal Reserve has to raise interest rates. They will be raising again in September, 3/4 points, again in November. I think it's after the midterm elections, then probably again in early 2023. But all this future increase in the interest rate by the Fed, I think it's already priced in the mortgage market. So it's possible that mortgage rates may already be peaking or already surpassed the peak. I know in early June, it was 6%. Today, it is 5.5% on average. So it has come down a bit. So it's possible that mortgage rate may be settling down. So the future is really about job creation. So if the mortgage rate is not moving, then you need job creation to have that extra demand into the marketplace. Housing demand or commercial real estate demand, all that would be important. But the Fed is not done, but the mortgage rate has already priced in what the Fed will be doing. Let me now go back to the oil, because Louisiana drilling off the Gulf of Mexico, very important to the economy. What I find is that casually looking at it, higher oil prices means higher mortgage rates, and lower oil prices means lower mortgage rates. Put it simply, if we drill more oil in Louisiana, more oil in Alaska, that means that not only do you benefit from lower gasoline prices, but your consumers will benefit from lower mortgage rates. So how is it related? Well, the relationship is indirect. Low oil prices means lower inflation. Lower inflation means Federal Reserve does not have to raise interest rates so much. But high oil prices means higher inflation, and Federal Reserve needs to raise interest rates much more aggressively. So if we can have more drilling in America, we may actually have low mortgage rates. But the fact that we are not drilling is really hindering the mortgage rate from going down. I mean, mortgage rates have retreated a bit because oil prices have come down a bit. But that's some of the trade-off that people need to consider. Certainly for the long run, we do need to have more green energy, but we also have to recognize green energy is only 10% of total energy need in America. 90% of energy currently is from carbon energy, oil production, gas. And if we don't feel that 90%, definitely it's going to impact inflation, it's going to impact mortgage rate, aside from getting angry at the gas station. So more drilling will certainly bring down some of the oil prices. Now, this is what the realtors are across the countries are doing. So just so that you have some comparison. Currently, about half of the homes are selling at list price. At list price, half of the home. But the other half of the homes are selling at a slight discount from the list. And what we are finding is that homes that is being sold within the first week with some discount is usually around 5% discount before contract is signed. But if the home sits on the market for 1 month, then realtors across the country, they're giving about 7% discount. If home is sitting on the market for more than 3 months, they're giving about 11% discount. So you have to price the home correctly. Otherwise, you have to do more discount from the list price. So this is what other realtors are doing across the country on average. But it's still roughly half of the homes are still being sold at list price, which is quite remarkable. Chart that you may want to use, you may want to share with your agents so that your agents can share with the clients. This is quite a startling information regarding the wealth difference between homeowners and renters. We all know common sense, homeowners build wealth. That's what we always say, and this is confirming that. So the renters, if you were to ask, what do you have? How much money in the bank? And if you sold your car, pay off the car loan, what would you have? And on average, renters would have about $8,000. That is my estimate, by the way, $8,000 to 2021. 2019, the blue bar, that's the actual from the Federal Reserve. So Federal Reserve is saying renters have $6,300. But since Federal Reserve is slow in updating data, I did my own calculation back of the envelope, and I think the renters may have a little extra because of all this COVID stimulus money that came in that was yet to be spent. But if you look at the homeowners, the official number is 255,000 as of 2019. But we know the prices have increased since then. So conservative estimate is homeowners have about $320,000 in housing wealth. So this is a major, major difference in wealth between homeowners and renters. If there is a motivating factor as to why people should buy a home, this is the graph. And this is also the graph to illustrate, to say that we meaning the country, need to do more to assure that minority households, whether Hispanic, African American, Asians, have access to home ownership, trying to identify if there are barriers, because without becoming homeowners, people will remain poor. But if people transition into home ownership, maybe they would consider as being, oh, now I am part of the middle class. I am building wealth. They have more stake in the community. So looking at things like credit scores, is it possible to change credit scores if the person is paying monthly rent on time consistently? That is demonstrating financial responsibility, and maybe we should give some bonus point to say, okay, that person should deserve higher credit score and therefore better access to mortgages. Things like that need to be considered, and certainly something that NAR is advocating in Washington, to say responsible renters should have access to mortgages as long as they stay within budget. FHA mortgages, often for first-time buyers, maybe streamline it so that it doesn't take really long to process, because during multiple offers, if it's an FHA offer, you want to ignore it because there are some bureaucratic delays. Maybe we need to reduce it, or even reduce FHA premium, something that we again advocate here in Washington to assure that there is better access to home ownership. But again, massive difference in wealth between homeowners and renters, and that's why it's critical, first in terms of the opportunity for all Americans, and second, for renters who have financial capacity, they need to look at this chart. I mean, they're wasting their money on rents if they don't see this chart out there. Inventory, it is rising, but still super tight conditions. Inventory levels are still below year 2000, and anyone who say we are on the verge of a home price collapse, they are completely mistaken. Inventory levels are not only below the normal year, but well below the subprime lending days of foreclosures. So during foreclosures, there are about 4 times more inventory on the market. So we don't have an oversupply situation, still tight market conditions. Interesting regarding the new home construction market, if you look at the inventory, the number of homes inventory that's available. So in essence, housing permits. So the builders got a housing permits. They have yet to put the shovel to the ground, and they want to make that sale. So they purchased the land. They want to start building, but no one is willing to buy that home. So inventory is rising, the green line. The blue line is homes under construction, yet to be finished. They're trying to sell it, and then inventory is rising. Therefore, the builders are becoming very cautious. But the red line is the most interesting. Red line is showing once builders completely finish the product, they have the garage door in place, refrigerator already in, ready to go. Inventory level is low. They are able to sell it quickly, and they're making money. So this is implying that builders possibly are excessively cautious. Go ahead and start producing. Go ahead and go under construction. And once the home is finished, you can find the buyers, because buyers are saying, no, I don't want to buy a home that is not yet built, because by the time that is finished, first, I don't know when it will get finished. And second, mortgage rate could change during that time period. Therefore, I am waiting for the homes to be finished before buying. So I think the builders are being excessively cautious at the moment, because whatever they finish, they can sell and make money in the process. The dynamics on building currently is that multifamily housing starts, so these are building apartments, are at 40-year high. So 2022 will finish as being 40-year high conditions. But the single family on the right-hand side is coming down a bit from last year. So we were trending in the right direction on building single-family home until the builders became very cautious, and now we're going to end with slightly lower housing starts for the single family, which means that, again, the inventory crunch. We had a housing shortage before COVID. Housing market boom during COVID really made the inventory conditions super tight. And now the builders are cutting back on production, which means we're not going to get any surplus inventory conditions. Depressing. Consumer sentiment about the economy, according to the University of Michigan Index. So this is a survey of people across the country. It's not only Michigan, it's across the country. How do you feel about the economy? And they produce some kind of index. And as you can see, it is very low. Americans are unhappy about the economy. Maybe this is due to the daily reminder when you go to grocery store, or even price of fast food. I mean, it's still rising. Sometimes, the burger, you thought that you could buy at $3, suddenly they're charging $4.50. And of course, they have to do that because price of meat is rising and so forth. But it's a daily reminder, things are not right in the US economy, and consumers are saying, look, I don't feel good about the economy. What about the housing? Is it a good time to buy a home? And according to Fannie Mae survey, this very straightforward, easy question, many Americans are saying, no, it's not a good time to buy, or very few people are saying it's a good time to buy. So they are feeling quite pessimistic at the moment. But here is a slightly different survey asking the question a little differently. By the New York Federal Reserve, is buying a home a good financial investment? Again, question is a little different than, is it a good time to buy? And they also ask people about, what do you think will happen to home prices? And most Americans believe home prices will rise 5.1% a year. What about rents? People believe rents will rise 6.6% a year, faster than home price. Note in this survey, they're not asking any question about rents. But if you ask question about rents, people truly are disappointed about rising mortgage rates. They don't like it. But people truly detest rising rents, and rents are rising. So if you put the question about rents into this broader question about, is it a good financial investment? 73.6% of Americans say buying a home is a good financial investment, while 6.6% is saying it is a bad investment. So you put the rent question and people are saying, look, I want to buy a home. I don't want to waste my money paying rents. And we know that rents will rise again next year and the following year and so forth. So this is the overall consumer mindset. So the forecast is the following. 2019, before COVID, home sales were fairly neutral, not really rising or declining. Home prices rising 4.9% a year. So dollar volume revenue, if you're a broker, would have seen about 5% growth. 2020 and 2021, amazing years, dollar volume rising 15% and another 25%, very good. But this year, things are different. As you can see, my forecast is decline of 13%. And I'm not saying this is going to be exactly accurate. It's hard to predict the weather for the next 3 months. So this will be wrong, but I don't know whether it's going to be down 10% or down 16%. So my best estimate or the model is suggesting about 13% decline. Home prices are still on positive ground. Even with some deceleration in upcoming months, I think the year as a whole will be about up 11%. So dollar volume could be down about 2%. And next year, maybe things stabilize. Prices, again, is in no danger of a decline condition. This is a national forecast. But as I showed you, Texas has a positive jobs. Florida has positive jobs, but not Louisiana. So Louisiana may be slightly lagging behind in terms of forecasts. But if somehow oil companies gain the confidence to say, we want to drill more, we can drill more, there's a profit opportunity to drill more, then more jobs will be created in Louisiana, and hence it will be beneficial in terms of more people with jobs in Louisiana able to buy homes. And furthermore, low oil prices means lower mortgage rates. So all that will be positive. But at the moment, oil companies are very cautious. They don't like the language coming out of Washington. Some of the language coming out of Washington, at least by some, are saying we want to kill off oil companies, and therefore oil companies do not want to invest large sums of money trying to do more drilling. But that's what we are currently. With this forecast, I hope you can make the appropriate business plans. Again, you had an exceptional past 2 years. This year, transition, maybe next year, stabilizing pattern. So thank you very much for giving me opportunity to share some of my thoughts with you all. So thank you.
Thank you. I told y'all he does a deep dive into all these numbers. Does anybody have a question? If so, unmute yourself and we'll take one or two before we move forward.
Dr. Un, this is Joe Meir. How do you correlate the costs that are happening with the cost to build with our housing market? Do you see any reducing in costs that's coming out of Washington, or work in reducing costs?
That's a very good question, because people are focused on higher food prices, higher gasoline prices. But you think about all this material stuff that goes into home building, and it is rising even faster than consumer prices. So consumer prices are up about 9%, but the wholesale prices are up 15% from 1 year before. All these truck drivers, they have to deliver lumber, that's adding all the costs to it. So material costs are certainly also hindering some of the building potential and the profit margins out there.
Is NAR working along with the National Home Builders Association in with the tariffs that's dealing with lumber prices?
So regarding NAR policy on the lumber, I know the builders are very active in trying to relay that message. I'm not sure if that's because I think from NAR priority, we're looking at the, like FHA insurance premium, credit scoring part, but definitely if there is a more Canadian lumbers coming into the country, it will make the cost of home construction a little more manageable.
Thank you.
Anybody else got a question before he needs to run? All right, well, thank you for being with us again. If y'all want to follow him on Facebook, it's NAR Research, and they post almost daily something to their social page. And if you want to dig into what research they're doing, you can go to nar.realtor, and under the research and statistics tab, you can find a ton of information, including past presentations that he has made at NAR meetings. So thank you again for being with us. All right, we know we are deep into renewals for licensing. So next up, we will have Matt Ritchie, who is the chairman of the commission, and Summer Meir, who is the executive director of the commission. Summer, how long have you had that position now?
Since about May of this year. But to be fair, I have been with the commission since 2006 as deputy director for the past 12 years. So.
And we also have Cindy Grissom on, who's going to talk about how this change in renewing your license impacts your E&O insurance. So I'm going to turn it over to you guys, and y'all can let us know what you're seeing with renewals and any hot topics or problems that y'all are hearing about.
Well, thank you, Rhonda. Appreciate that. I am the chair this year of the Louisiana Real Estate Commission. I'm gonna just say a few words, and I'm gonna turn it over to Summer and to Cindy. But effective, just to welcome all the brokers on the Zoom today. We appreciate your time. The commission's been hard at work all this year. This was one act that we've been working on the last couple of years, and we'll get into why we did it. But effective April the 1st of 2022, Act 193 of the regular legislative session became law, and this law changed the license renewal period for all licensees. Why do you do that? You might ask. The commission decided to make this change to protect licensees and the public and ensuring that there's no lapse in E&O coverage. That's the primary reason why this was done. Under the previous renewal schedule, it allowed licensees to renew delinquently, and so that became, used to December 31st was the delinquent period. Well, your E&O expired on December 31st. And then there was a potential lapse in coverage and left them vulnerable to claims. And now the commission wanted to ensure that the public is actually knows that the licensees that they're dealing with are covered. So that that was the primary reason for it. I know we've been asked that pretty regularly. Why would you change it to August the 1st and due by September 13th? But that is the deal. And we've had great success so far. And I'm going to let Summer tell you a little bit about that. But Summer Meir is our new executive director of the Louisiana Real Estate Commission. She has been with the commission for over 16 years, and she's doing a fantastic job as executive director. And I'm going to turn it over to her.
Thank you, Matt. I appreciate that. And again, I appreciate Louisiana Realtors giving me the opportunity to speak to update everyone with our new licensing period. So I'm going to share my screen so that everyone can see the commission website. And I'm going to give kind of an overview. We have a frequently asked questions page that kind of goes over the new renewal period as well as the delinquent periods. And then also just answer some questions concerning, CE requirements, what happens if your license expires, things of that nature. So if you give me 1 second, I'm going to share my screen. Okay, so whenever you go into the website, I assume everybody, Rhonda, can y'all see my screen?
Mhm.
Okay, so whenever you go into the website, this is the main page, it's automatically going to have that pop up, which is going to show, so you can, if you click on that box, you'll be able to immediately go to the portal to log in. If you want to just go to a different page, just click on the side and it'll go away. To find the frequently asked question page, you'll click under either current licensees, or you can click on down here where it says I'm licensed. It's going to bring you to the same page, and then you'll see this renewal season update. This is just going to kind of go over some of the new dates. So as Chairman Ritchie said, our renewals have opened up. They did start on August 1st, and the timely renewal period will extend through September 30th. So the first delinquent renewal period will now start October 1st and go through November 15th. If you renew your license during that time frame, you're going to pay a $50 delinquent fee for active and inactive licensees. Once that date passes, November 16th through December 31st is our second delinquent renewal period. $50 for all inactive licensees. It pretty much always stays $50 for the delinquent fee if you're an inactive licensee. But at that point, if you're an active licensee, salesperson, or broker, it's going to be an additional $200 delinquent fee added onto that. After December 31st, you no longer have a license. So it is imperative that everyone understands that your license does expire on December 31st. And if you don't renew by that date, then you will have to start over as an initial applicant. That means you have to go through the background check process. You have to go through the testing, which is really the biggest thing that everyone is concerned about, is the testing portion. So it's imperative that you let your licensees know that they are required to renew by December 31st, or they will have to start all over. If you see a little drop downs here, if you click on the little plus signs, it kind of opens up and answers some of those questions. So if you don't renew your license by September 30th, that's, again, like I just said, it goes into the delinquent period. So the October 1 to November 15th, and then November 16th to December 31st. Again, if you don't renew by December 31st, then your license is expired. You have to start the process all over, which that also explains that right there, how you would have to start off as an initial applicant. Your continuing education, that's been a big question that everyone is asking, and I think it's caused a little bit of confusion. For your continuing education requirements, you still have through December 31st to complete your 12 hours of education, 4 of which is including that mandatory course. If you renewed your license, let's say you've already renewed your license on August 15th, you do still have, again, through December 31st to complete those education requirements and have those done. It just needs to be done by the time that the license cycle starts over on January 1. So please let your licensees know that they will not be, they don't have to wait to renew the license before having the education. It just needs to be completed by the end of the year. And our education staff is here to answer any of those questions if they have any questions or concerns about that. You are required to purchase errors and emissions insurance whenever you renew your license. When you go through the renewal process online, it will give you an option to either select our policy with our group policy with Rice, or you can also choose to provide a policy declaration page and a separate E&O coverage form to let us know that you have the same coverage but with a different company. But it does all need to be done while you renew the license, because anytime after that, if you do it after January 1, then your license, you did not complete all portions of your renewal and therefore you do not have a license. So you do need to make sure that you are completing that E&O renewal at the same time that you're doing your online renewal for your license. This just kind of covers the fees. The errors and emissions, which Cindy will get into momentarily, but the price for the E&O coverage did go up just a little bit this year, but considering as we just discussed with inflation, it really is not bad. The price is $149 for the policy. So you can see here that the sales renewal and the errors and emissions insurance comes out to $219. If you're an associate broker or regular broker with your errors and emissions insurance, that comes out to $254. If you are providing your own insurance coverage with that errors and emissions independent coverage form, your fee will just be $77 for a salesperson or $112 for the broker associate broker. As brokers, it's important that you make sure that you remember to renew that corporate license as well, because generally most of your licensees fall under that corporate license. So do not forget to do that renewal also whenever you do, because it does have a little bit of a different login for your portal. I did want to actually show you a portion of the portal so that you can see where your licensees show up in your, one second. I can make this go down. Here we go. All right, so once you log into, as I showed you on that front page, whenever you click on that main box that pops up, this is going to show you where you log into your portal page. So I'm going to log into a test broker page so that you can see where, how you can check whether or not your licensees have renewed or not. So if you give me just 1 second. So once you do that, you'll pull up your roster here. Now let me find the one that Damien set up for me. So your supervised licensees will show up under here. Now you can see here to where some of the licensees have renewed, but some have not. You can sort it by expiration date. So you can see here how, of course, we have them test names, but these test licenses, the first 3 have not been renewed, and then the last one has been renewed. So it's important that you kind of go through, because you are responsible for your licensees. You do want to make sure if they're doing any business that they do have an active license. So it's always important before that September 30th mark, if you have broker meetings or meetings within your office, to let them know, hey, these are the ones of you, these are those of you that have renewed, that have not. This is the list that we have. So we keep it up to date so that y'all can obtain that information to let them know as well. But you can sort it by date again, so you can see whether or not the expiration goes to the end of 22 or the end of 23. You are still able to print their licenses, which is over here under the print. If you see a blocked issue, what that generally means is that they probably have an outstanding compliance case that they have failed to apply on, or that they may have NSF fees or something that would have caused their license to be blocked within our compliance division. So if you do see that, you need to let your licensee know that they need to contact the commission to find out why their license is blocked from printing. That pretty much covers the new license renewal period. I'd be happy to answer any questions if anyone has any. And then if not, I think Cindy's going to do a little portion to cover the changes with the E&O.
All right, does anybody have a license renewal question?
If the Tim Tullis, Summer, how are you
Hey,
today?
Tim. Good, how are you?
Good. I just a curious question on an expired license. Does it require the expired licensee to test or not test? I know they have to test, but the 90-hour education certificate.
No, so we will count the course that you took prior. We will accept that 90-hour coursework. So you do not have to take the course over again, but you do have to test again.
Okay.
And then go through the post-licensing and everything that you would have had to do if you were an initial applicant.
Thank you.
You're welcome.
Hey, good afternoon, Summer.
Hey, Joe.
I know this, we appraisers renew every 2 years. Is this new cycle date going to impact when appraisers also have to renew?
No, so this is only for the commission side. The appraisers are still, their delinquent renewal period still runs through the end of June. So none of that will change. Those renewal dates stay in place, stay the same.
Thank you.
You're welcome.
Yes, Summer, I have a question about the continuing education.
Mhm.
Is there any consideration, I'm not sure if it's available now, as far as carryover from the previous year? If you've got more hours than you need in a particular year, can it be carried over? Is there any consideration for doing that in the future?
No, unfortunately, it isn't our law. Those hours count for the year that you took them. There's not been any discussion, honestly, by the commission as far as having any carryover. That would require some law changes, I believe. So the education does count for the year that you took it in.
All right, anybody else? Okay, Cindy, I think you're up. Thank you, Summer. Thank you, Matt.
Thank you.
Thank you.
I'm going to unmute myself. Can y'all hear me? Can
Yes,
everybody
I
hear me?
hear
Yes.
you.
Yeah.
And
We can
Thank
hear
you.
you.
Yes.
it's
Okay,
still up. I don't know
I
if you
have
need
a
that or not.
PowerPoint, but I don't think I'm going to need to use it. I think because in the interest of time, I'll just go over the primary issues so that I don't take up too much time, because I know we're running a little bit later than expected. The main things I wanted to talk about today is basically how the new license renewal requirement deadlines impact your E&O insurance. And as Summer said, you still are required to show you've got continuous E&O coverage when you renew your license. So when you renew your license, if you renew it anytime before September 30th, you're going to be within the timely renewal for your license. For your E&O insurance, you just have to obtain your insurance before January 1 to be timely. But the problem is you cannot renew your license until you have your E&O insurance in place. So you have to either enroll in the group program when you're renewing your license, or download your information to show that you have your E&O insurance with another qualified provider. So the main things I wanted to make sure that people understand is, with our program, you pay your premium into the Real Estate Commission, and then they send us the download of who's purchased, and we send out your certificates of coverage. So for us, as long as you buy it before the end of the year, you're okay as far as keeping your continuous coverage. But what happens if your license isn't renewed timely? Then you're going to have to pay penalties. And also, if your license expires, that may cause a problem for your E&O coverage, because the E&O coverage is for active licensees. So if you forfeit your license, you're not going to be able to enroll in the program, because you enroll when you do your license renewal or when you do a license application. So what we want to make sure that everybody understands, if for some reason someone does miss their deadline and they have to start everything over, contact us. The best thing probably to do at that point would be to buy an extended reporting period endorsement, because that would make sure that they have coverage through the time it takes to go through the reapplication process. But what we can do is work with people individually on that and make sure that they don't have problems. Hopefully we won't have a lot of people that don't renew their license timely. I just want to make sure that people understand that just because if they mess up and they don't get their license renewed, we don't want them to mess up their continuous coverage. So work with us or with your insurance provider to make sure you maintain continuous coverage. I did want to talk just very briefly about the new E&O policy, because we do have a new policy out there this year. It's essentially, the coverages are essentially the same. There's just a few little differences. And if you all want, I'm happy to share the PowerPoint that kind of goes through everything. I just didn't want to take up everybody's time today, because I know it's running a little later. But as Summer said, the annual premium for the group policy now is $142 plus the $7 LREC insurance fee. That is really one of the least expensive in the 15 states where we write. So it is a really good value for $142 for 100,000 per claim limits with a $300,000 aggregate. You also still have only the $1,000 per claim damage deductible, and there's no deductible at all for claims expenses. So you don't pay anything out of your pocket when we hire an attorney to defend you or to help you respond to a claim. Also, it's important to note that there is no limit on the claims expenses that are paid out. So your limit only applies to damages, which would be, a settlement or a damage award, awarded by the court. And if there's $250,000 worth of legal fees, those are all on top of that. The insurance company pays for that, even though, it's not addressed in your limits. It's all outside of it. There's a list of the sublimits and the supplementary payments that are included under your policy. You've got environmental claim sublimits of $10,000 per environmental claim, $5,000 escrow claim sublimits with a $10,000 aggregate. Again, no limit on defense costs for these. Lockbox claim supplementary payments, you have a $5,000 per lockbox claim. That's for property damage or loss of use of property. If there's a claim where someone entered through a lockbox, that's $10,000 aggregate on that. Again, no limit on your defense cost. Fair housing discrimination supplementary payments, you've got $25,000 for that. Now on that one, it actually is damages and claims expenses combined per fair housing claim. There's regulatory complaints coverage that's automatically included. You have $2,500 for, to go towards paying an attorney to help you present your case in front of the Real Estate Commission. That's defense costs only. It won't pay anything if you have any kind of fines or penalties. Note on regulatory complaints, you have only 20 days to report those to the insurance carrier, which you report it to Rice Insurance Services because we administer for the carrier. On your claims, you have 90 days to report. So remember, there's a shortened notice requirement on regulatory complaints coverage. There's also a shortened notice on subpoena coverage. You have up to $2,500 for hiring an attorney to help you respond to a subpoena, whether that's providing documents or attending for testimony. Sometimes it's helpful to have an attorney present to help you make sure that you're doing everything right when you're responding to a subpoena, even though that's not really a claim against you. Also, you have supplementary coverage security breach notification. There's up to $5,000 paid. As you all know, if there's a security breach, you're required to notify your customers that we've had a security breach, and that goes towards helping to pay for those notification costs. There's also optional endorsements you can purchase. The first most popular is usually the increased limits endorsement. So you can get $250,000 per claim, $750,000 aggregate for a premium of $164. That's on top of your other premium. There's $500,000 per claim with $1 million aggregate. That premium is $246 in addition. We also have firm excess policies that a lot of people buy. A lot of the people want to have protection for their firm. Those are typically $1 million. We're trying to work with CNA to see if we can go higher than $1 million, because now some of the franchisees are wanting more than $1 million for the firms. We're hoping we'll have something like that available before January 1. And we will let you all know when that's available, but we're in conversation about that right now. There's a conformity endorsement you can purchase that just helps you if you're licensed in a different state to make sure your policy meets their minimum requirements. That's only the other mandated states. If you're licensed in another state that isn't mandated, or in any state, your insurance is going to provide coverage for your licensed activities in other states if you're domiciled in Louisiana. So Louisiana licensee who's domiciled in Louisiana is going to have their coverage for their licensed activities in other states. But for example, somebody from California that comes in and gets a Louisiana license, the insurance is not going to cover them for their transactions in California because they're not domiciled in Louisiana. And that helps maintain a couple things. One, it keeps the insurance regulation. We have to file it if we're offering it to the people in California. Since we're filed in Louisiana, it shows that we've got coverage with the insurance department. We've done our duty to file that program, but also it keeps Louisiana's prices down because you don't want other people coming in and buying in Louisiana just because the premiums are cheaper. And then all of a sudden our claims go blow up because we've got claims all over the United States. The other endorsements that are available, there's an appraisal endorsement available for $250. That's for actively licensed appraisers. There's a residential personal interest endorsement. And what this is for the sale of residential property that you, your spouse, or an entity owned by you or your spouse have an ownership interest in. On this one, this isn't your primary residence. Your primary residence is automatically covered under your policy. This is if you're doing like flips or things like that. But what I actually have the language, the pertinent language in the PowerPoint that I provided, because it's really important. There are conditions in there. If you buy that, you need to make sure there's things like you have to hold it for 180 days. You can't have constructed or developed it yourself. There has to be a home warranty. There has to be a home inspection. There has to be the seller disclosure. There's a whole list of things you've got to do to trigger that endorsement to apply. So make sure if you're interested in that, read the details on the endorsement so you go through and you follow each of those steps. And also, if you buy it because you're going to sell a property this year, remember, you have to have the endorsement on your policy when the claim is made. So keep it up for a number of years until you think it's safe to let that endorsement go. Another endorsement that's available in Louisiana is the developed constructed by spouse endorsement. That is $250 for it adds insurance, $100,000 per claim, $300 aggregate for the sale or listing for sale of residential property that's constructed or developed by the licensee's spouse under certain conditions. Again, this is another one that has specific things set up that you have to be not involved in the construction or development of the property yourself, other than your marital interest. The licensee can't own or control more than a 10% ownership interest in the entity, corporation, partnership, or trust that constructed or developed the property. There has to be a home warranty. There has to be seller disclosure. There has to be disclosure that you were, your spouse was involved. There's a whole list of things you've got to do. So again, I also included that in my PowerPoint, so you can look at that if you're interested in that. Also, always remember on our website, we have copies of the policies, copy of the endorsements. We've got risk reduction material. We've got videos. We've got different things you can look at. You can use these things in your, presentations at your broker meetings to kind of share some useful information. So always remember that that's another resource that you all have that you can use. I wanted just to make sure you all understand how the claims made and reported policy works. You have to know when the date the claim is made, what is the policy retro date, what is the date of the professional services that give rise to the claim, and what is the date that you report it. You have to remember, you've got to report the claim during the policy period that the claim was made in. When is the claim made? A claim is essentially a written demand for money or services received by the insured, or service of a lawsuit against the insured, or institution of arbitration or mediation proceedings against the insured that seeks damages and alleges a negligent act, error, or omission in the licensee's professional services as a real estate salesperson or broker. So remember, this could be an email, this could be a text. If it's in writing, it could possibly be a claim. Now, if it's not in writing and but you know that something's going to happen, you have the right under your policy to go ahead and report that to us, and we will record it as an incident and make sure we have all the paperwork in so that when it does become a claim, we're ready to roll. That doesn't mean you have to notify us every time that you have a closing that someone is angry, because otherwise, we would all be busy all the time, because sometimes people, have buyer's remorse, or they, just say something that they're unhappy at a certain time in the deal. But if you know, sometimes when somebody's going to come and they're going to ask you to pay for something, or they're going to demand that you do something for them. In those situations where you know something's coming, it may be better just to go ahead and report it, but you're not required to report it until it's actually a claim in writing asking for damages or services from you. Your
Thanks.
retroactive. Oh, go ahead.
We got a question through chat that maybe you can quickly answer. If a home inspector enters a house and an agent isn't present and something happens while that inspector is there, they're using an electronic key to get in through either a Supra or a Century lockbox. Whose E&O can a claim be filed against?
Well, you typically, what's going to happen if it's a lockbox claim, there's going to be limited coverage for, if there's property damage. They could make a claim against the real estate licensee and they would have, limited coverage under the lockbox. The lockbox really isn't intended to be like, it's not a huge dollar amount, but honestly, we don't get that many lockbox claims. Everybody seems concerned about it. And I agree, it's something that everybody does need to be concerned about it. But we really don't get that many. In that situation, home inspector's insurance, if you've ever been involved in a claim, which we're often involved in a claim where there's a claim against the home inspector, typically their policy says that they're limited to the return of the money that they paid for the home inspection. So it's not giving the kind of protection that the Louisiana group policy provides. There are some policies out there that are for home inspectors that are broader than that, but a lot of time, it's not really necessarily the insurance policy that says that. It's usually the home inspector's contract, but a lot of times the insurance companies will rely on that and say they don't know anything. That's what
So
we
it
see.
sounds, that may be a good broker hotline question. And those guys are coming up next, but you did say you have a PowerPoint, and I think you're going to share that with Kim so
Sure.
that we
Yes.
can get that posted up
Yes.
with the recording of this webinar. And I'm not trying to cut you off, but
Oh, no.
we need to keep moving.
Yes.
Does anybody have a really quick question for Cindy before she hops off? Something quick and easy. No. All right, well, we're gonna have her PowerPoint that she prepared for today, dealing with license renewals and all the endorsements that she was going through. And if you remember in January, she did an awesome presentation for us at the beginning of the year with our first call. So that PowerPoint is posted up where all the recordings are, and you can go back and refresh that. And with that, I think we're gonna move to our broker hotline. So I wanna thank you, Cindy, for being here along with Summer and Matt. It sounds like renewals are going fairly well and people are getting that done, and brokers just need to monitor their agents to make sure they're getting everything done by September, and emphasizing the E&O has to be done either when they're renewing now, or they've got to pay it and make sure the commission knows it by the end of the year, or they're in trouble.
That's right.
All right, guys. So next up, we're going to have Eric Landry. He is a partner with Brazil, Saxe and Wilson. We changed legal representation this year. And so far, I think they've been doing a great job. Not that I didn't expect that, because Eric is one of the few who worked initially when we started rolling the broker hotline out at a different firm. They're going to give us some highlights from the hotline this year, and they're going to focus a little bit on commission and commission disputes and independent contractor agreements and all that fun stuff that you guys have been writing in about. So, Eric, are you ready? Eric, are you muted?
Eric, you may need to unmute yourself. Let me see if I can do it.
Okay, I just unmuted me. I'm sorry. I'm on.
That's
Got
okay.
it. Thank you, Rhonda. I appreciate it. And as I was saying, you pronounced the name of my firm right, which is rare. Most people don't.
If I
most
didn't,
people don't
Troy
get it.
would be all over me.
That's right. Yeah, so as Rhonda said, we're going to kind of go through some highlights of some of the common things we've seen on the hotline, and then some of sort of this, I guess, trending topics, so to speak. The first I have on my list is commissions and the sort of national conversation about commissions and the pending litigation that's going on that I'm sure you all have seen. We did publish an article, I think it was back in June, and Kim can correct me, about the pending litigation and what it means. But the short summary is that you had a group of people who were, home buyers and or sellers. There's a class of people that are plaintiffs in these lawsuits that complained about essentially the MLS rule, which dictates that once a home is listed on MLS, that you must make an offer to cooperating agents and brokers, either for a percentage of the sale price or a gross price, to be paid to that cooperating broker who brings a willing and able buyer. And basically the argument is that that's anti-competitive, that it hurts the home buyer because now you're sort of inducing folks to go out and find deals where the buyer's agent gets paid more as opposed to what's best for the customer, and that it's sort of a prearranged price fixing scheme that sort of defeats competition. And of course, we disagree. There are lots of good arguments of why that's not the case. There are lots of good reasons why this type of arrangement is best for the consumer. And NAR has put out a lot of materials on that and kind of has its own freestanding website on that. And the short story is that it encourages competition. It allows people to kind of set rates that are based on the market and what the market's doing. And it gives the home buyer, the first-time home buyer, the ability to sort of shift the cost of having an agent represent them to the seller who's getting all the cash in their pocket as part of the sale. And so it reduces the cost of the transaction on the buyer side. And there's lots of other reasons too, but those are some of the sort of highlighted ones that NAR has raised and that we feel are, legitimate reasons. And so for us here locally, there are no pending lawsuits that name either the Louisiana Association and Realtors or any local associations, or that name our local MLS or any local brokers. But we are certainly keeping an eye out for it and are aware that this is going on, and just want to make sure everybody is kept up to speed on that and, kind of understands what the positions are of the National Association and the State Association in terms of communicating with people about this, because if people ask you the question, you want to be able to respond appropriately and well-educated way. And I think it is what we just described. And another thing to be clear on is that, commission rates are not set. They're not established by rule or regulation or by the association or anyone else. Commission rates are freely negotiable, and of course, brokers will dictate to their customers, this is what we charge. But, brokers do not get together and unilaterally decide as a group what that's going to be. Every broker can decide for themselves what their commission rate is going to be and what they're going to charge their customers. So that's important to communicate. And then, one of the things I think that NAR has tried to impress upon people is to make sure that everybody involved in the transaction understands commission payments will be paid and how much those will be if the sale occurs, and get those disclosed and out in front of people early on in the process as possible, and certainly not, the day before closing, like, oh, hey, by the way, the buyer's agent's going to get a check for X. And sometimes, that kind of surprise, is off-putting for people involved in the transaction. And we have to remember that these people aren't doing real estate transactions every day. And while we expect those kind of things to show up on the settlement statement, they may not. And the first time they see it may be the first time they've ever seen it. And so that's an issue in terms of getting out in front and disclosing that. So that's kind of the state of the disputes relating to commissions. Again, no pending actions in Louisiana, nothing for us to change or do other than to shape the narrative and make sure we're communicating properly to customers and clients. So one of the other topics we wanted to touch on is independent contractor relationships and what that means and the benefit of it and all those kind of things. So I think most folks are aware, Louisiana has a rule within the real estate licensing law, within the occupation law about real estate licensure, that establishes that a real estate agent is in fact an independent contractor of the broker if they meet certain rules and requirements. And I will make sure I say those correctly, so I'll pull up the exact statute. But what it says is that a sponsored real estate licensee shall be an independent contractor of the sponsoring or qualifying broker for all purposes, and shall not be an employee of the sponsoring or qualifying broker if all of the following conditions are met. And it says the real estate salesperson or associate broker is a licensee. Substantially all of the remuneration for the services performed is directly related to sales or other output rather than number of hours worked. And 3, that there's a written agreement between the sponsored licensee and the sponsoring or qualifying broker that specifies that the person is not treated as an employee. So those are the 3 requirements. That, there's a little bit of additional sort of information and requirements within each one, but the bottom line is you got to be a licensee. That's a simple one. We're all there. The way you're paid needs to be tied to sales as opposed to other hours worked or something like that. And then finally, you need to have a written agreement. And that's kind of a starting point. Obviously, is make sure that as a broker you have a written agreement that is signed by both you and your agents, indicating the relationship of an independent contractor and that they are not an employee of the brokerage. So that's very important to have all those 3 basic common elements. Even if you have all those 3 basic common elements, you got to make sure that you comply with sort of all the other rules that exist in Louisiana with respect to determining whether a person's an employee or independent contractor. And those are things like the amount of supervision and direction that you give to an agent. If you are dictating every minute of every day what they're doing, if you're requiring them to be certain places at certain times, and you're dictating how they do their job to a certain level of detail, the court might find that they're no longer an independent contractor, they're an employee because you've exercised that level of control over that person to make them an employee. And so despite the fact that the statute says they are, you still could be at risk if you don't do all those things. If you don't give them some supervision, but not such a level of control that they can't supervise their own activities. The others, let's see, I was trying to find some other examples. Employee benefits, so, to the extent that they get benefits that other employees get, they could be seen as not being an independent contractor and be deemed an employee. Making sure that their compensation is based on commissions and not on hourly rates, hourly wages. Another one is making sure that agents have some skin in the game, so to speak, in incurring expenses. Like, do they pay for some of their own training? Do they pay for some of their own equipment? Do they pay for some of their own expenses? If you, as a broker, are paying all those expenses on behalf of the agents, then that raises the risk factor in terms of them being determined to be an employee as opposed to an independent contractor. There is an IRS provision that is basically Louisiana statute took the IRS provision and mimicked it, right? And that IRS provision, it's federal law, and it really just applies to the tax treatment of independent contractors who are real estate agents. It has nothing to do with state law issues, and those state law issues are things like if a person's driving from one showing to another and gets in a car accident, they're an independent contractor. That means the broker's not responsible for damages caused during that car accident. If they were an employee and in the course and scope of employment, the employer would be responsible for that. That's a state law issue, right? That's a tort. That has nothing to do with the IRS provision, which is simply to allow for the tax treatment of those payments, both on the sending side of the broker and the receiving side of the agent. So again, make sure we have a written agreement in place, make sure it spells out it's an independent contractor, and make sure that the level of control and supervision and all those other things are in place. One thing I'll tell you is consider having a mandatory arbitration mediation type of provision in your independent contractor agreements. That can be useful and beneficial as well. One big reason being the inability to bring a class action. So if you had multiple agents who thought they were, should have been treated as employees and paid as employees and got the benefits of employment like an employee, if you have a mandatory mediation or arbitration provision in your independent contractor agreement, they would not be able to sort of come together and file a class action. And so there is some benefit there, as well as other benefits in terms of cost savings and expedience in getting things arbitrated as opposed to litigated in court. One of the other questions, and this one has come up in a few hotlines, and I'm moving on from independent contractor. If anybody has any questions, we'll certainly answer them at the end. The idea of who owns a listing, so to speak, and what happens when an agent moves from one brokerage to another, or leaves a brokerage, or retires, or whatever the case might be. So the bottom line is that a listing of a home for sale is a contractual arrangement, right? And that's a contractual arrangement between the broker and the selling party, the owner of the home. So the agent may execute that as agent, indicating that they're the designated agent of the brokerage, but the agent's not signing that as being a party bound to the same obligations of the broker and enjoying the same rights of the broker. The contractual arrangement is between the broker and the owner, and the agent may appear, again, just for purposes of designating who the agent is that they'll deal with, but the broker is ultimately responsible for that contract, as is the homeowner. So when an agent decides they're going to leave a brokerage, and whether it's go to another brokerage, retire, or otherwise, the contract stays in place between the broker and the homeowner, and that does not shift, change, move, or otherwise. So the brokerage would continue to be, the listing person or the listing entity for that sale. What obviously needs to be addressed is what happens if the sale closes after the agent moves, and that should be spelled out in the independent contractor agreement that a broker has with the agent. So going back to the agreement we just described for purposes of independent contractor relationships, that should also dictate, hey, what happens if you decide to quit working, you decide to move to another brokerage? How is that payment going to be handled? What are you going to get, if anything? And that should be spelled out in that written agreement. However the parties decide to spell it out, whatever the final deal terms are, there's no prohibition on the broker sharing in the payment, even though that agent's no longer affiliated with that broker at the time the deal may close. They can, make a payment to that agent after the agent is left to go to another brokerage if they want to. That's been a question a couple of times, and so thought we'd kind of address that one. One of the other questions we had was about kind of what does a listing agreement include? What should it include? What should the homeowner sort of have to agree to? And I think, it's all the typical stuff that you would expect in terms of, what is the commission basis? How is it paid? When is it paid? And of course, that includes, is it upon closing of the sale? What happens if you pull out of the sale? And there's usually some provisions that dictate, commission may be paid even if the closing doesn't occur. And it's I'll say the fault of the seller or listing person. The term of the listing, obviously, there are typical 90 to 180 days. Some could be longer, some could be shorter, but spell out exactly how long the listing lasts. And then at that point, if it's set to expire, you can renew it. And you can potentially include auto renewal provisions in your listing agreement that indicate that, hey, this is a 6-month deal, but it automatically renews for 30-day periods if neither side, effectively terminates by taking some affirmative written action. Obviously, you decide if it's an open listing or an exclusive listing. Most of the time, we're going to have an exclusive listing, so you're the sole one that can list it. You want to determine what the price is going to be, and potentially have a mechanism for determining how that price can be changed. You obviously need the homeowner's authority to change the listing price if you want to do that, but you may put in a process or making recommendations and getting approval to lower the price or raise the price if necessary. And then again, mediation arbitration provisions. for the same reason we talked about the independent contractor relationship, using a mediation arbitration type of provision, it would be beneficial to have that in listing agreements as well. And that way, if you do have a dispute with a homeowner at some point down the road, you can arbitrate that dispute rather than going to court. And there are a number of benefits there. Again, avoiding class action, probably less of a concern here in this relationship, but could be a concern. And then on top of that, you've got cost savings typically in arbitration. You've got expedience, typically gets resolved faster, and you've got privacy. If you arbitrate a dispute, there is no public filing of any kind. If you litigate a dispute, obviously you got to go to court, and everything you do in terms of filing and all the hearings and all that are all public record, and anyone can find out. So it can avoid having bad publicity by mediating, arbitrating disputes with customers. That's kind of near the end of my time. It covers most of what I wanted to cover. I'm happy to take any questions if anybody has any.
Anybody have something for Eric?
I do, Rhonda. Eric, I submitted a question earlier, a couple of weeks ago. I've run into it a couple of times in various parts of the state with the third-party holder of deposits. And it's not a problem for me, but it is a problem for those holding it, because they seem to want to give it back to the broker once they have a dispute. And I would suggest or ask if there is a form or a preparation that's been done or consideration given to preparing a suggested agreement between the parties and the third party holder of that deposit, rather than just an acknowledgement that it happened.
Yeah, and so, certainly in our, depending on the size of the deal, I mean, we have separate sort of escrow agreements that we enter into with, whether it's, and I assume you're talking about like a title company or a closing attorney or somebody like that, right?
That's generally who does the holding, but yes, just,
Yeah.
I know that my preferable title company attorney prepares his own document and won't accept a holding of a deposit as a third party unless the parties agree to it. Basically,
and that's the smart thing to do if you're on the holding side of the deposit. That's the smart thing to do. And that's what I would do. I mean,
I'm basically asking for suggestions on how do I give that hint to the rest of the title companies that don't do it, because not very many of them do.
Yeah. And look, typically what that agreement says is, I'm going to hold this money and I'm going to disperse it when I get joint written instructions from both of you. And until that time, I'm not going to do anything with it unless I decide I don't want to be part of this game anymore. And if I don't, I can go deposit it with the court. I can resign as escrow agent, and you guys can fight about it. And that's, I mean, to boil it down in short, that's typically what those agreements say. And the escrow agent doesn't ever want to be dragged into a fight when they got no skin in the game, right? So that's why those agreements are important for the escrow agent.
90% of what I read from the escrow agents is a matter of a waiver of liabilities, and I'm not liable for anything, and it doesn't have any provision in it for what they're going to do with the money if there is a dispute. And that's the part of it that I think needs to be addressed, at least by suggestion, even from the Real Estate Commission.
Yeah, and there are provisions regarding how and when and why and the process for deposits if held by a broker in the real estate licensing law. And it's basically like, you got to account for it in connection with the closing or within so many days thereafter. But in terms of those folks who are not regulated by the Louisiana real estate licensing law, like title companies, closing attorneys, those rules don't apply. So I agree. It would be good. And certainly we could put together, a basic form that could be, shopped around to those folks to say, hey, why don't we enter into this when we give you the money, just to make sure there's no confusion about what happens in the event of a dispute.
There you go. Well, I've prepared one and submitted it to my agents and asked them to use it. Whether they do or not is goes back to whether they're my employee or not. They don't usually follow my instruction.
Yeah, and look, going back to that question, mandating that an escrow agreement form is not the level of control that I would think would rise to the point where you'd say, well, obviously they're an employee if you're telling them that they need to use an escrow agreement. It would need to be more control than that in terms of their daily activities and how they do their job.
Thank you.
You're
Yeah,
welcome.
Tim, both Matt and Summer are still on, so I'm sure they took notes on that. And maybe we can get some guidance in the coming months from out of the commission. So if not, we'll just have to see how we can pursue that. Does anybody else have anything for Eric? Does everybody know about the broker hotline and how to access it? I think Kim had the site up a while ago. I believe it is under member benefits. Is that right, Kim?
Yes, and I'll put it back. Hold on just a second.
And again, they're not going to answer specifically as if they're your attorney. They'll give you some good general guidance. Anything on a very specific case you should be discussing with your own representation.
That's right. Thank you for saying that. And we're happy to, if you tell us, suppose these facts are true, we're happy to suppose those facts are true. But if you tell me, I got sued by so-and-so and I need help, that's, again, we're at a point where you need to hire your own counsel to represent you.
So you can go directly there by going to larealtors.org/legal-hotline. There's a little form you'll fill out, and they're generally pretty quick about turning that around. I don't think I've ever seen them take, I don't want to put you on the spot, Eric. I think 2 to 3 days, usually quicker than that.
Yeah, that's about right. We've had some more complicated ones that took a little longer where we kind of, reached out to people to ask clarifying questions and maybe do a little research. But yeah, 2 to 3 days and most of the time quicker than that's very fair.
All right. Well, thank you, Eric, for being here. I'm glad I pronounced the firm name correctly. BSW is a whole lot easier to say, though.
That's right. Just say BSW, that's fine. Just not
Tell
BS.
Troy-
Just don't call us BS.
Yeah, tell Troy to keep up the good work.
All right, I will.
All right. So I'm going to run through the calendar before Norman jumps on to give us some comments. But next month on the 21st, we are having an antitrust webinar just for brokers. There's stuff that we're doing every single day that in the environment we live in, any people could presume there's an antitrust violation and go out and get a lawyer and haul us into court. So Leslie Murchow, I think I said her name correctly, with NAR is going to be on. So look to register for that. October 20th and 21st. If you were with us in May, Robert Sislan, I cannot say his name to save my life because I am not Italian. Silano, I believe is correct, with gave us a presentation on cybersecurity. He actually has a certification class. It is 6 hours, so we've broken it into 2 days, 9 to noon each day. Either you, if you want to take it, or your administrative staff, your agents can sign up for that. Again, it'll be an extended version of what he gave us in May. CE credit is still pending approval from the commission. But it's all about real estate safety and security policy and procedures that we need to all be following to protect not only the brokerage exposure, but your clients and customers to criminal activity, threats, and cybercrime. And on November 3rd, if you were with us on in May for the Realtor Day meetings, there was a half-day class, a 3-hour class with Lynn Madison on compensation. And y'all, this class is phenomenal. I would suggest you do a watch party or something, break out the popcorn, do whatever you have to do to get your agents to attend. But she is literally going to walk you through every conversation you should have with your seller about establishing your commission rates and how that commission's to be paid, as well as your buyers and who pays the commission, how it's paid, what's covered, what's not covered. The use of the word free and all of those things that these suits have been built around, she is giving you guidance on how not to be sued. That is approved for CE. Now, because it's approved for CE and because it's virtual, there's going to be a limited number of seats available, so to speak, in the class. We are giving you guys the first chance to sign up. That link is on the broker outtake page, the broker series page, and we will allow agents to sign up at some point. If your agents don't need the CE, again, I would suggest hosting it in your offices and letting them group together and watch it. It'll spur conversations and it'll let you do a kickoff towards the conversation that you need to have. All of this, the registration for these, as well as our December call, can be found on the broker series page, which is larealtors.org/broker-series. That's also where the recordings will be and the PowerPoint slides are going to be. Norman, are you still with us?
Yeah, I'll be very, very brief. I want to thank all the brokers that attended today. We hope this has been informative, helpful to you all. Please reach out to us on any subject matters like Tim just did. We really appreciate that input because now we can look at it, maybe a possible suggestion on a form that we can maybe put out there, work with the commission on. We're going to be your partner in success, not only legally, but legislatively. I will tell you, we're looking in the near future to potentially be able to offer to independent contractor realtor members who are in that category, which most of ours are, a great health insurance option that may or may not be better than what they're getting on the exchange today. So stay tuned for that as well. So just we're going to continue to work with all of you, support you and your agents, your brokerage firms to make you even better than what you're doing today. So we always encourage the input, questions so that we can get your problem solved and help you move forward as the great business owners that you are here in the real estate industry in Louisiana. So we appreciate this. And I want to also legislatively, since Tim's on there and Lacey Beheth, legislatively, we depend on your input. We had a bill this session that in essence, if you were an attorney, had a salesperson license, you could basically drive up to the commission office, pay your fees and fill out your form and automatically become a broker without going through the years that you need to become a broker or passing an examination. And the bill wasn't a funny bill, it was a serious bill. And sometimes those bills get legged. Well, Tim and Lacey came over to the Capitol, were willing to testify on that bill. In particular, Tim had a very vested interest in a background. He is an attorney and was very well versed in letting the legislature, was willing to let the legislature know that just because you were in that category of having an attorney law license and an attorney with a salesperson license, you really didn't know what you were doing being a broker unless you went through all this process that you have to go through now. So we want to thank those that want to get involved with the association and the legislative process.
That last statement you made about me was a personal observation. Not every attorney is in that position.
That's true. That's true. They're not. But my point is, Tim was in a great position as both on a broker side, owner side, or even being a licensee, a realtor, and he was prepared to let them know that this was a bad mistake if they were to go down this road. So Tim, thank you for showing up at the Capitol that day. Luckily, Tim and Lacey were not, did not have to testify because the bill was never heard that morning in committee. But those are the types of things that come along that we really appreciate your input and your support, supporting Louisiana Realtors. So Tim, I want to publicly thank you in front of the group today.
You're welcome. My pleasure and privilege.
So Rhonda, that covers just briefly what I wanted to cover, but thanks to everyone.
And Norman mentioned we need your help. You are going to be getting a survey, and please don't say, "Oh my God, another survey," and just throw it in in your trash, your email trash. We're sending a very specific survey to brokers. We need information from y'all to help us plan for next year. We are going to work on trying to have a 2.5-day broker only summit. We're trying to find someplace fun that we could extend some room block dates so you could turn it into a little mini family vacation. We know y'all occasionally need a break out of the office, and it's hard to get out of the office and justify that, but by providing some broker only training, we figured that might encourage some people to attend. The other thing is Kim needs some help, and our LARPAC side needs some help with signing up for call to actions. And I'm waiting on her to give me the number, but I believe it's you text Realtor to 30644. And if that's not correct, Kim is going to let me know that. Let me see what she's, yes.
It's in the chat.
It's in the chat. So we need your agents, you and your agents, if you haven't signed up, it's Realtors with an S to 30644. You will only get a text notice to respond to the call if there is a national issue that NAR needs realtor input on, or if there is a state issue that we need your help on at the Capitol. So please consider sending that message to your agents and signing up yourself.
And you won't
wait.
get more than 3 or 4 texts a year, if that many. So it's not going to be like some of these magazines and these websites you sign up. I don't know, Reese Witherspoon with Draper James seems to send me one 3 times a day, but it won't be like that, promise.
Eloise, are you still there? Is there any parting words you have for us? I guess you had to jump off. So
Nope, I'm here. I just had to unmute myself.
All right.
I just want to tell everybody, thank you. And thank you, Rhonda and Kim, for all this information. This is great information. Thank you so much. And looking forward for our next one.
Yep, we do need topics for December. So if anybody's got a hot topic that you just got to know, send it to Kim or I. Otherwise, we will hopefully see you in September on antitrust. We're hoping to see you at Lake Charles for the annual conference and installation, because we know y'all like to have fun. And with that, I'll say goodbye and thank y'all for coming.
Thank you.